Now, Ernst & Young has released the 2016 Global Consumer Banking Survey for the retail banking industry. Now, this survey is banking customers globally to understand their perspectives on how banks can remain relevant and achieve higher satisfaction and loyalty with the customers. Colin Daley is a partner advisory services at Ernst & Young and joins us here in the studio. Collins, thank you so much for coming.
Good afternoon.
On the program. Good afternoon. Now, what is the aim of this survey?
Okay, so the main aim of the survey, I mean, we interviewed 55,000 customers in 32 countries around the world. And the main aim of the survey was to just really understand two things. One, are banks still relevant? And two, what do banks need to do to actually remain relevant? And then equally, what are the drivers of satisfaction?
Okay, so what did the findings show?
So the findings show that the four main things that are important around trust is trust, understanding of customers, engagement, and customer experience. These are the real drivers of customer behavior, customer stickiness, and also customer advocacy.
Now, a lot of issues are actually raised in that survey, and one of that has to do with the digital age and its impact on bank customers. Now, the role of banks and so on were also raised in that survey. What do they portray in terms of the dynamics of retail banking at this time?
I think there's a real revolution going on right now in the banking sector, in the sense that banking customers are no longer comparing themselves against other banks. The kind of service they're looking for are what the fintechs tend to provide. And also the organizations such as Uber, organizations such as Airbnb, these organizations that provide you with a great service. They're very simple. To some extent, they're great value for money. And you can achieve what you want in a very simple and transparent way. So the banking sector is having to learn a lot from fintechs and having to learn a lot from these online organizations.
Does that mean that the retail banking arm of financial market, it's more lucrative than other arms, other categories of financial market in terms of what the opportunities and the benefits that banks can derive from it?
I think the opportunity is great. I mean, what we've seen from some of our surveys that there's about, by 2025, about 35% of revenue will be potentially at risk if the banks don't jump into the fintech's position. So banks need to get close to their customers, and they really need to understand those customers, understand their needs today and understand their needs tomorrow.
Now, I know that this is a global survey, but so when we compare what transpires internationally and what happens here in Nigeria, how would you describe the situation?
Well, so what I would say is that from what we're seeing here is that Nigerian customers are actually, to some extent, ahead of the curve. So Nigerian customers trust, for instance, their banks more than any other customer around the world, but they don't necessarily trust them to provide them with unbiased service. They trust them to ensure that they're going to protect their money and they're going to protect information, but when it comes to providing unbiased service, that's what the Nigerian customer wants.
Which is key? Is it being able to provide the services or being able to keep my money?
Well, it's about being able to provide services that meet my needs today and also meet my needs tomorrow. The other thing is that Nigerian customers, more so than any other country in the world, want banks to take the information as long as the information they use is actually going to help them with their financial performance as a family.
So are banks really keen on ensuring that they meet with the demands of retail banking and the financial markets, taking at the Nigerian scenario? Are they keen on meeting the demands? Because I know that things are changing by the day, and like I mentioned about the dynamics of the retail banking.
Absolutely, that's a
everything changes by the day. Tomorrow, next month, you see new innovations. Do you think that our banks are poised at a position to meet in the demands of retail banking to be able to be ahead of the curve, like you mentioned?
I think that's a fantastic question. I mean, if we look at our last survey, the relevance of banks, if I was to ask the customer, who would you describe as your preferred financial service provider, they would say a bank, and it was about 93%. That number now has dropped to 87%, which is the highest difference around the world globally. But what we're seeing here actually is that the fintechs in this country are actually doing very, very well. You've got fintechs going across lending platforms, going across savings platforms, going across payment platforms. So to some extent, Nigeria is leading. Where the challenge is, from what we're seeing, is on the customer experience, ensuring that you're closer to the customer, the banks are closer to the customer when it comes to developing products and services, ensuring that products are transparent in terms of the fees, in terms of the functionality that you're going to get from it. And a big issue that banks need to face with here is the issue of data. Because to truly be a retail bank, you need to understand the customer's needs. You need to understand their transactions. You need to understand their preferences. And these are very difficult for banks at this present moment to actually ascertain.
Do you think the regulations come into play in helping our banks to meet up with the demands of retail banking in Nigeria?
I think that there's clearly been a lot that's happened in this country in the last 10 years when it comes to retail banking and the regulator. So in my view, there needs to be a lot more consistent correlation between the regulator. Why? Because banking and telco, if you look at that, there's a huge convergence there. Right? If you look at the asset management business, there's a huge convergence there as well. So really the regulators almost need to come together and work out how they can bring the various elements of the regulation together so they can serve the customers effectively. Because what customers want, that's what they say in our survey, is a provider that's going to support them for their needs today. Some of those needs may be provided by an asset management company. Some of those needs may be provided by a telco, some by a bank. So how do the various regulatory frameworks come together to ensure that you create the enabling environment? And I think that's a challenge for the future.
So, okay, you think that what we need is to be able to create a synergy amongst other participants in the financial market that will make the operations very easy. But what's your outlook? Let's talk about how you think we can do better in retail banking.
Okay. So the first point I think is about being close to the customer, so understanding the customer's needs. And to do that, you have to get customers' data. There's no other ways to do that. As it is right now today, banks find it actually quite challenging to actually get data from customers and to store it and then use it effectively to create insights that are actually going to create value for the customer and also create value for them. Secondly, the processes are often quite convoluted. So there's a need to look at the customer journey end to end across banks to make sure that the journey is effective as it can be. Technology still remains a challenge. Ensuring that there's the right amount of technology investment to ensure that banks are able to provide services to customers effectively. Analytics becomes really important. Being able to predict the future. That's what customers want. Customers actually want you to be able to provide them with additional services. And that requires analytics. And then there's the performance management that goes around, and then there's the culture that goes around it. Because if we're honest with ourselves, retail banking is still relatively new in Nigeria. Okay. Right?
Thank you so much, Colin Daley, Partner Advisory Services at Ernst & Young. Thank you so much for coming on the program. And just before we wrap up, Business Incorporated Global Minor Realty Inter says it has suspended a top executive over $10.5 million in payments to a consultant on its Simadu iron ore project in Guinea and has alerted the US and UK authorities. A second senior executive has stepped down. Rio Tinto took the steps at a time when mining companies had come under scrutiny in corruption probes. An internal investigation led it to flag the issue to the US and UK agencies, and it said it was in the process of contacting Australian authorities as well. The company has suspended the head of its Energy and Minerals Division, Alan Davis, who was in charge of Simandou in 2011. And that brings us to the end of today's edition of Business Incorporated. Many thanks for sticking with us. I am Bolaji Akinwale. See you next time.